When it comes to trading, sometimes people's time schedules will not allow them to show up to the charts, look for a position, take it, and then be done. They need to be able to find a position during the week and potentially hold it for the whole week or maybe longer and get out. And that is where swing trading comes in. Now, some people prefer to swing trade in general. That's because maybe they find it easier just to take a position and leave it instead of stressing over short-term time frames moving quickly. Some people might find it less stressful. Some people might find it more stressful because they have to watch a trade for a long amount of time. And some people want to take more trades, which you're not going to get if you're a swing trader. So continuing from my last video, I made a video about scalping and my strategy I use to scalp and how I basically trade, but I thought it would be ideal to follow that up with my tips to give you guys on swing trading and what I think you guys should apply to it and if it will suit you and the considerations you have to take before swing trading. So that being said, let's get straight into this video. Be sure to stick around to the end of the video so that you guys can get all of the information. And also, before I forget and before you forget, can we guys do the YouTube business? You know the YouTube business. Leaving a like really helps the video. Watching till the end of the video really supports the channel. And leaving a comment, I always read the comments and I enjoy to read them. So let me know something you liked about the video, something maybe you didn't like, something you want me to improve on. Also, don't forget, if you are an aspiring trader, the best thing you can do is join my free community. That is my Discord channel. There's so much information and there's so much value. It's not full of idiots. It's really a good place for you guys to find good resources and ask questions and also speak to me. So that being said, let's flip this around and get onto the charts. Alright, so when it comes to swing trading, the thing you need to have down is your higher time frame analysis. So when we're trading the lower time frames, we're mostly concentrated on having a bias towards the upside or a downside. But when you're trading higher time frames, you need to actually know the really higher time frame bias. Like when we're trading the lower time frames, we can sometimes, when the higher time frame is bullish, there might be an opportunity in our session, maybe we're trading London or New York, to be able to take sells in that session, even though that could set up for tomorrow to be able to take buys. But when you're swing trading, you don't want to be doing those counter trend trades because you're not trying to counter trend. You need to follow the higher time frame momentum and you need to have your analysis down. And you need to have your analysis down from the monthly time frame, because if you're going to be entering on a 4 hour or 1 hour minimum, 1 hour is like a 5 minute when it comes to, I'm not going to call it swing trading, it's more higher time frame trading, being able to hold a trade throughout the week. Your analysis has to come from the monthly, looking at what monthly candles are doing and basically take the same process that I teach you guys. So first start on the monthly, see where your support and resistance lines are to see potential targets, right? For example, here on the monthly, we have a resistance here. I'm going to change that line, make it nice and clean. Right, so we have this monthly resistance here and we can see there's potentially to this next resistance is a monthly target. You're going to drop down to the weekly and say, okay, I can drag this up to here. So we've broken out the weekly resistance. What do I have on the weekly time frame? We have some support levels here and we've closed above this resistance here. Maybe somewhere where these wicks tapped is going to be a target here. So on a weekly time frame, when you're looking to swing trade, your targets are not going to be these 4 hour targets. You're looking for the weeklies to fill up to here. So if you took a swing trade on this weekly close, basically somewhere around here after getting this information, you're going to be looking to target 300 pips to the top of the range here. So we're going to look at this example and maybe how you would have been able to catch that trade. But obviously the monthly closing above the range, the monthly closing bullish means you should be looking for buys. Weekly closing bullish means also that buys do make sense, especially when it's closing above a range here like this, and potentially your trades come at the break of the weekly high and something like that, right? So then the daily is the time frame where it's kind of like the 4 hour, right? Because you're trading your trade based on day to day here, right? So when you're looking at the daily, you want to be looking, okay, where's the daily on the chart? And this is what's going to bring me on to my second point here, is that you guys have to know market positioning, because if we're at the top of the range, this is one of the worst place that you're gonna buy, right? If you're buying here at the top of the range, this is the worst place to buy. You can't get away with that on swing trading. Lower time frame trading, we can trade anywhere on the chart, right? It's probably not the best to be buying at this resistance, but we can keep buying to the resistance, pull back, buy to resistance, pull back, buy to resistance. And if you notice, when we were ranging, that was pretty much the strategy. The strategy was every time we pull back, we buy to resistance. But as a high time frame trader, you can't do that. You're looking to find a setup where you can get in a trade for a while and hold it. So you're looking for setups down in this range here. You want to be getting down all the way down here to get up to here, right? And that's one of the biggest issues, is that you're not going to get setups all the times, and you have to wait for a setup and back test. Okay, what confirmation do you need? So let's say we were looking for buys above this zone here. The only confirmation for buys was this daily candle closer here, closing bullish and breaking these highs here. So once you have that, the next thing you have to do is then scale down to the 4-hour time frame. This 4-hour time frame is going to be basically your entry time frame. So once you end up finding a range like this, it's exactly the same strategy we use in our lower time frame trading, just moved up a higher time frame. And I think that's the biggest mistake people make, is that they're like, I have to change my whole strategy, I'm trading swing. No, it's the same strategy, the same similar setups, but what you have to have on point is you need to have your high time frame zones and analysis. Because on lower time frame, we don't really care about price pulling back to a zone, but when you're trading higher time frames, you are looking at, okay, if price does pull back to here and higher time frame is bullish based on monthly and weekly, and we are at this zone, this might be a great opportunity for price to go back and retest the highs, because now you're going and getting in a good position. So say we're bullish, right, on higher time frame here, and when you see price pull back to these zones, these major lows here, these are prime opportunities, prime opportunity, prime opportunity. All in here is prime opportunity. And you're not looking, when we might be taking sells from here to here, you're like, okay, I'm going to wait for this to set up for buys, because I'll be able to catch a trade from here to here and hold it to the top of the range and finish that type of move there, right? And it's the same concept, using LTAs, using clean candles, just applied on higher time frames, right? So you need to have that higher time frame analysis down, and that's going to come from practice. You have to practice, you have to reach out, you have to look at, okay, is my high time frame analysis playing out? Do I really understand the pair? Once you do that, you will now also need to start to include fundamental analysis, because if you're holding a trade for a week, 2 weeks, 3 weeks max, I mean, you shouldn't be holding for 3 weeks, but it's possible, or a couple of days, there might be implications that come with fundamentals, right? So there might be a news event coming out, there might be, and you need to understand that news event fully, right? So let's say for this week here, we have some news, we have retail sales. Retail sales came out, you need to understand exactly what retail sales could do to price, and if that could, hinder your trade or not. You also need to get used to holding drawdown. You're not going to get these scalping entries that I like to take, because that's my personal way of trading. And at the end, I'm going to give a small comparison between scalping and swing trading, and why I chose scalping, not swing trading. So stick around for that. But you also need to understand, okay, what if this news comes out? Like, most people think that if interest rates are going down, right? Let's say they don't hike interest rates. People think, okay, this is going to be bad for currency, because every time interest rates were hiked, currency would push. But actually, if interest rates went lower, that might be good for currency, because the people are looking at it at an economic standpoint, not as the particular inflation rate or interest rate going up. They're looking at the economy improving now, because the banks don't have to hike it. So there might be an initial push to the upside, then followed by a retracement. These type of stuff you have to understand and study, and make sure that it's not going to impact your position, right? And make sure that your position is not around moves that are potentially going to put you in deep loss, like pullbacks like this and stuff like that. But at the end of the day, if you really know your stuff, you could actually get in a position before news and look to hold it, right? So the last thing, well, not the last thing, but another very important point here I want to talk about is that this is when it's okay to have actually 2, and I'd say maximum 3 pairs. I'm always an advocate of trading 1 pair. 1 to 2 pairs is always an ideal, but it's actually not too much of a bad idea to have more than 1 pair, because you're not going to have that many setups. But you have to make sure to focus and learn and backtest those pairs. You need to collect your own data, going through backtesting softwares to see, do you view the markets in the same way, and is it working when you backtest that data? Because that's what's your confidence builder. If it's worked on the same conditions and you were very strict, then you gather live data, and if the live data is working compared to the backtesting data, and if they're both working, then you know you have a winning strategy, right? And you have to make sure that that work is done. That's the work. You can't just rock up to the charts, expect to trade. No, it doesn't work like that. You have to build a strategy, but that strategy is exactly the same as trading lower time frame with a few tweaks, right? So you're using minimum 1 hour time frame for entry. 1 hour is like so once you get like this 4 hours, so let's break this down and look at this trade that might play out this week, right? So we start from the weekly time frame. This close above here is key, right? So as a swing trader, we're looking at, all right, we have a clean range till this wick around here. right? Because wicks are candles on lower time frames. If we can break this high, we can look for potential upside. Then we go to the daily and we see, is there an entry? No, there's not really an entry here. You could argue that once this daily high broken, you could have been in an entry. Where does stop loss have to go? Stop loss has to go all the way down below this support here. You can't just rock stop loss right here like this and expect it to go. That's not proper swing trading. You need to give the trade some breathing room and really ask yourself, where is this trade wrong? Where is this trade completely wrong? Target will be somewhere, probably, you know, you could extend your targets, but you have to ask yourself, where is this trade wrong? So the trade would be wrong if it started breaking this support, because not only will it break back in the range, it would break below this range and then break this support. So you need to make sure that, okay, my stop is going to be in a good place, and this is swing trading. You need to have bigger stops here. You can't get away with smaller stops unless you get a nice entry, and sometimes that happens. And we're looking at examples like these examples here. You could get really nice stop losses here, right? If you take an entry somewhere in here, you only could run like a 100, less than 100. You could only run a 90 pip stop here and have a 400 pip target. So you do get it, but it's situation dependent here. So next thing you're gonna do is, let's say you went, okay, fine, 4 hour, where's my entry on the 4 hour? I would say you would wait for a close above here. If you start see this breaking the high and moving, now you're going on 1 hour and you're saying my entry is on that 1 hour close, right? This 1 hour close would have to be your entry here, and then your stop loss can be below this range adjusted like this, and then this would be your swing position essentially, right? But of course you would rather take it not the day before the weekend, but this would be your swing position here essentially, and you'd say, okay, I need this to rock up here, because you're using the 1 hour for entry, but the trade is based on 4 hour daily and weekly and monthly, and then you look for this to continue up bullish, right? And now you're in this good position. All right, so now we're here till today here, and in this position here, I would not be surprised, and you shouldn't be surprised if this is able to come all the way back to your entry and then still end up going to TP. So you have to be used to this coming all the way back to entry and still going to TP. So that's another adjustment you have to make there. So let's go look at one more example of a prime example here. So let's go see one here in the past. This is a perfect one. This was a great scenario here. Clear range, 4 hour closed above. You're looking for entry with that floor 4 hour above, and you're looking to target. Just that is enough to get into a swing trade. Just this confirmation here is enough to get into a swing trade. Stop loss below the 4 hour low, because you have this whole range to protect you. 80 pip stop loss, and you look first target with swing. This is only your first target. 1 to 1 is the first target, but you know, if the higher time frame, so if we looked at the daily here, we could see that, you know, if it does end up closing like that, why would you close your trade, right? There's no point to close your trade unless you see resistance, because you're swinging here, right? So as you can see, it shot through your resistance. You could hold this trade to the next high, secure some, keep holding it, and expect a pullback, but keep holding the trade, right? Boom, and then now the next target, and now you can start trailing stop losses on swing trades like that. Move your stop loss to there, and then hold it still, you know, and then just start trailing your stop loss, well, you know, below here, and then move your stop loss, and you can end up this position where you've entered here. You could hold it all the way up to these highs here, somewhere around here, for 300 pips. So the problem is that takes a long time to play out, and I can guarantee on paper this sounds really good and really easy, but I can guarantee when you do this live, you're going to have emotions. These pullbacks, you're going to go down to the 1 hour time frame, and you're going to say, oh, this is a deep pullback, maybe I should go break even, maybe I should secure. This consolidation here, you're like, oh, when this was breaking down on the 30-minute, you guys use the 30-minute and you're like, I should close the trade, and you end up closing the trade, and then you say, oh, I wish I held. And that's reality. That's what happens, because this took a long time. It looks so easy now in hindsight, but in reality it's not. You have to really trust your higher time frame analysis and be on point. And the problem is, if you get it wrong, you've missed a week worth of work. If you get your higher time frame targets wrong, let's say you're up 200 pips in profit, and then it comes all the way back down, and then it's in drawdown, then you close at break even or loss. All of that work is like a week gone. So it's like, oh, for a whole week, not only do you not get paid, now you have to find another position, or you potentially missed a great position. So it's actually very difficult compared to session trading. So to wrap up this video, I'm gonna make a quick analysis between why I prefer scalping to swing trading and why I chose scalping versus swing trading. The first reason is efficiency. when you're holding trades longer time, there's more room for the trade to become inefficient, right? So you have to look at expected value of each trade. What is your expected value to win in a certain amount of time? When you're only trading and your average trade lasts 30 minutes, maybe even an hour at max, that expected value can be very easy to calculate, right? Because you know you can get an average move of 20 pips, 30 pips. So it's very easy to calculate, and you'll be able to have this intuition as to, okay, I'm going to close out here, and you can build a balance quite easily like that. The other point is that it's stress-free, and I don't like monitoring my trade. You know, I want to do a trade, be out of all positions. I don't want to go to sleep overnight. Some flash news comes, puts me in drawdown, hits my stop. I don't really want that happening. Or I don't want to be up 200 pips in profit, but my target is 250 because my stop loss was 150, and then pull back and lose 150 pips but have to trust my plan. It just feels like it's such a battle between you and the market, when if you're just looking to catch a quick volume push in the move, that's great because you get from point A to point B and you're done. You take your piece, you have no open positions, you get on with your day and you move on. So that's why I find it a lot more efficient. Another thing is you get a lot more chances. Say I take a loss at the beginning of the week, I have tomorrow to make the win, and then the next day to make another win. Maybe you take 2 losses, but then, you know, from day to day you can find more positions there. And it's just, for me, a more effective way to trade the markets compared to swing trading, where there's less opportunities, right? You have less opportunities to take trades because they don't come as often. And I simply just don't like, as a psychological point of view, holding trades for too long and potentially losing profits I see in front of me. For me, if I see 5 grand of profit, I want to take it. I don't want to try get that 10 grand and just hold it and trust my, even though my high time frame analysis should normally work. So the final point I wanted to say is something that I love doing, and this has been the best thing, is that sometimes what we get is, if the market's in a great position somewhere from the bottom of the range, if I find entries on my lower time frames, like my 15 minutes, I can just, let's say I take a 10 lot for example, I can close a 5 lot in my normal profit zone and leave another 5 running with original stops. So I can widen that stops a little bit. If I lose the trade, it's counted as break even, but I leave that 5 lot runner to go to my higher time frame target. So I turn a scalp position into a swing position, and that is super powerful when you can turn your scalp position into a swing position, because your scalping position is a very small stop loss and the swing take profit is huge. And if you're using some good lot sizes, even like a 4 lot's enough, because if you use even a 4 lot, you close 2 lots, you leave a 2 lot running for 100 pips is 2 grand, for 200 pips is almost 4 grand. That's some serious impact. And if it comes back to break even, or it comes back in a loss, either you've made nothing, or if it comes back to break even, at least you made the profits you secured with the 2 lot or the 5 lot, whatever you decided to use. Lot size is not relevant in this scenario, but it's just to give you an example, right? Because it's all the same concept. Lot is just relevant to risk, how much you want to risk per trade. But essentially that's a really powerful tool, and that's what I personally do, is that when I do my high time frame analysis, I then have an idea of what we can potentially reach, and if the market's in a good point to leave runners, and then I will try to leave a runner to move to my higher time frame target. So yeah, that's this video. Hope you enjoyed it. If you haven't already, check out my scalping video, because that is about scalping and how I scalp. This is you know, a video towards that as well, like the next video about swing. Let me know if you enjoyed the video. You know what it is. Do the business, like, subscribe, all of that stuff. If you haven't subscribed, what are you doing? And yeah, hope you enjoyed this video. Take care, trade sharp, and until next time, peace.